I don't have a song for the 5 o'clock live, but it works. We're live at 5. I like that. I like that. I like that. We're live at 5. I want to give y'all a chance to come on in the room so we can see what the market stands to hold for us this coming week. Last week we had Jackson Hole, had some things that were going on last week that kind of gave us a little bit of volatility. Yes. And that caused a few issues. This week we'll have some things, and I want to make sure I grab this YouTube link for you all. So I'm going to go and grab that now. If you're coming on in, hey there. If you're over on Instagram, you might consider coming over to either Facebook or, going into my Facebook group or coming over to YouTube. So that way you can see what I show on the screen. If you're in Instagram, I can't share to the screen. I'm putting the link to the YouTube link in the chat. So if you'd like to go there, you can. Yep. There we go. I want to grab this YouTube link. I should be live in YouTube. I sure hope I'm live in YouTube land. I want to grab that link for that video. Hey, everybody. It is Sunday afternoon. I sure hope everyone has had a really good Sunday so far. Mine has been interesting and restful all at the same time. I actually was able to sleep in today, which generally I don't. What happens is, it's not that I can't sleep in, it's just that I wake up and my brain starts moving. And once my brain starts moving, I have a hard time after that going back to sleep. So that's where I run into the troubles there. We can add that banner, even we won't make it live just yet. Hello. K Prasad, hi. T Gatlin, greetings. I am live on YouTube. Yes, 10 of us are here. Wonderful. Wanted to make sure that we're off to a good Sunday evening. I think maybe this is a better time on Sunday evenings. Last week I did 3 o'clock, and I felt like I was hanging out by myself in YouTube land all alone. And I was like, well, I really, there could be a few more people. Hey, Michelle. Let's go ahead and get started talking about this week. I did upload a video yesterday. No, it might have been Friday. I uploaded it. This is the link here. I'm also going to put it in the chat, in the comments, so you can see it. If you haven't seen the video yet, it's basically a video about what to do if you have a small account. If you have a small account, I'm going to hide it now so I can maybe put that there. What to do if you have a small account, and to do if you have a small account and you want to grow your small account. What do we do with that? This video, I uploaded it, I think it was Thursday or Friday. And it's also in the comments, so you can probably grab it from there and take a look at it. I basically talk about, if you have $100, what should you do? I actually have another one I'm going to do, probably if you have $500, what you should do, because it gives you a little bit more flexibility. If you have $1,000, what should you do? Gives you a little more flexibility there as well. But those will be coming. But this video, I want to say it was Friday. Might have been Thursday. I remember one of those days. The days start running together after a while here, but it was one of those days I uploaded it. So let's go and talk about what's coming up this week in the market. That's really what we're here for. What's going on and what's coming up this week in the market. Oh, I need to share my screen, don't I? I'm going to need to share my screen so you all can see what's going on. So you can see my screens. I'm going to present, share my screen. I'm going to share the main screen. Yep, I'm allowing it. Okay, hope everybody can see. Yep, looks like you all can see my screen now. You see my YouTube channel there. This is the video I'm talking about. Small account, do this. This is the video I'm speaking of. Go ahead and maybe check that out if you'd like. Then we're going here. We're going here. We can hide that. Alrighty, so this is what the weekly chart looks like from SPX last week. I just wanted to quickly hit what kind of movement we had. Last week's candle is this green candle right here. This was the candle for last week, kind of hidden inside of this humongous red candle from the previous week, but it is a green one. May just be a slowdown, so there could be a little bit more, if you don't study candle patterns, you may consider giving it a little bit of a involvement just to see what happens, what candle patterns mean, and what different things mean on the candle patterns, that kind of thing. Let's look at what's going on. Last week we had Jackson Hole happened. A couple of days last week. We also had the BRICS Summit. I'm not sure if you all remember me talking about the BRICS Summit, but the BRICS Summit was basically Brazil, want to say Russia, India, I don't think the C was China. Might have been China, and then South Africa. I think it was China, and then South Africa. And that conference was the 5 countries, or the leaders of those 5 countries, talking about economic situations. Okay. So that was going for a couple of days, 2 or 3 days last week. We also had the Jackson Hole going. Jerome Powell and some of the other people from the Feds talked there. That caused its own level of volatility. We had some earnings. NVIDIA had earnings last week. Y'all already know that was an interesting piece of information that, thank you. That, NVIDIA had earnings that took the market in a couple different directions. It had earnings, ran up, and took the whole market with it. The next day, everybody who made a bunch of money sold it. So the next day, which was, I think was Thursday, NVIDIA dropped a bit, and then Friday decided to rise some more. But that's what happens when you have companies that are inside of the S&P 500, inside of SPY, and those have a high enough effect when things are moving. I don't know if I'm thinking that the NVIDIA thing is truly that the stock should be moving like it is. It's more like people are piling on because they're like, well, I feel like I don't want to miss anything. So they're jumping on, like the FOMO is kicking in and say, let me get over here and see if there's a little thing. I don't want to miss out on a few dollars. Everybody making money on NVIDIA. I don't want to miss out myself. And people are jumping in, and the stock is then operating outside of how it would normally be functioning, right? But AI is a real deal, and what they're doing with the chips and all those things are real deals. Yeah, FOMO is definitely a thing. People are like, well, what's going on over there? And you feel like if I don't go jump in or go watch it, at least I'm gonna miss out. So people go, let me jump in, let me put my few dollars in the pot and whatever. So that's why you get this random movement, right? That's how that goes. Let's talk about what's going on next week, though. Or this coming week, really coming tomorrow. We don't have anything on the list tomorrow, Monday, August the 28th. There's no meeting scheduled, at least on the Forex Factory calendar page. There's nothing there. Tuesday, we've got a couple of red folders. 9 in the morning, the S&P CS Composite. This is the housing price index year over year, and housing price index month over month. This is, or house price, I think it may be called, is yellow. The 10 o'clock is the CV Consumer Confidence and the JOLTS job openings. Those, again, red folders. So we got red folders on Tuesday. Then next day, red folders on Wednesday. ADP, the non-farm employment change, is a red folder, 8:15 in the morning before the market opens. And on Wednesday at 8:30 in the morning, we've got preliminary GDP, which is the gross domestic product, quarter over quarter. That's a red folder. Then you've got the quarter over quarter price index, the preliminary. That's an orange folder. Then you've got some yellows, goods trade balance, preliminary wholesale inventories. Those are yellow folders. Yellow means not really too much volatility expected. Orange is medium volatility. Red means high volatility is expected. 10 o'clock in the morning, we've got an orange folder, pending home sales month over month. And the home sales matter because of the fact that when homes are selling or not, that's an indication of something going on with how the economy is running. People make a big purchase with their houses. And when people slow down buying houses, or they slow down making that big purchase, and let you know that people, it could indicate that people are a little nervous or a little more hesitant. Let's go with that. Hesitant to put their money on such a big purchase like a home. So pending home sales, that's what orange folder there. 1030 crude oil inventories. This always shows as a yellow folder, but I really seen that it's more of an orange folder, really more what's going on with our oil matters. So the inventories of oil matters, 1030 on Wednesday. It says yellow folder, but really I'd go with medium. Thursday, 7:30 in the morning, we got Challenger job cuts year over year, yellow folder. 8:30 in the morning, core PCE price index, unemployment claims, those come about. Personal income month over month, personal spending month over month. Those are yellow folders. Red folder for the unemployment. 9:45 Chicago PMI is a yellow folder. 10:30 natural gas storage. So on Thursday, we do have red folders, but they happen before the market opens. Friday. We've got some more red folders. Red average hourly earnings, non-farm employment change, unemployment rate, all red folders, all before the market opens. 9:45 final manufacturing PMI, and 10 we've got ISM manufacturing PMI and manufacturing prices, construction spending, and the Ward's total vehicle sales, which that Ward total vehicle sales, even though it says it's a yellow folder, that's another purchase place where the economy comes up to be a discussion point. People are buying, not buying. I read somewhere or saw somewhere, either way, that people are defaulting on their car loans at record rates. That people are defaulting on those high car loans, record rates. And some of the other car manufacturers or car salespeople are starting to offer 72 months, 84 months on cars. Some other companies are now starting to do shorter term leases. Instead of doing the leases like we've seen for 2 years and 3 years, they're doing like 6-month leases, 1 year lease. This lets you know that people are having to get a lot more creative with how they're managing things, as far as especially in these purchase areas where we continue to manufacture cars. That plays a big part in our economy. But if they're just sitting on the lots, or people are getting them and can't afford them, it's just all the pieces and the parts. Even though they say there's no recession coming. There's no recession coming. I look through investing.com is another place where I go to look to see what's happening during the week. And investing.com actually has the 3-month and 6-month bill auctions, and the 2-year, 5-year note auctions all are happening on Monday. Dallas Fed Manufacturing Business Index also. The 2-year and 5-year note auctions have a 2-star, which is, again, medium volatility. Everything else I saw, though, was similar to what we saw on Forex Factory. But you can look, honestly, you probably can come. I do find that investing.com, I find more things on investing.com. So this really could be a place where you come directly here and not even go to the Forex Factory. The difference between the two is Forex Factory makes it look all nice and easy to see what's going on. The investing.com doesn't make it as nice to look at. But the information here is good information. Very good information. All right, let's move on and see what's coming up in earnings this week. What's going on in earnings this week? Now we're, I believe, winding down our earnings season. A lot of the big boys are not on the list anymore. They've already been through their earnings. So let's see. Before open on Monday, this looked like North American Travelers, maybe it says here. Baozun, sounds like a Chinese something. Monday after close, Heiko, Afia, and Life Vantage. That's Monday. See, some of these companies are ones we may or may not have even heard of. Tuesday morning, here's one we do know about, and this is NEO. Used to be, when I first started trading, which has been several years ago now, NEO was all the rave. It was mentioned all the time. It was everything we were talking about. NEO is an electric vehicle company that I believe originates in China. It was being talked about all the time. It was like, trade NEO. Then they didn't really hear about it. Last week, NEO popped back up. On it popped up onto the list for the cash secure puts and covered calls. It popped up last week for that. And so now it's here. It has earnings this week, which may be why it has shown itself back into the place. It's got earnings on before market on Tuesday. Right. Then we got Best Buy is there, Big Lots, Scotiabank, BMO, Catalent, and I'm not sure who this one is here. Tuesday after close, we got Hewlett Packard, HP and HP Enterprise, must be two HP and HPQ, Box, Umbrella. No, that's not what that is. Woodmark, Joy, PVH, and Encino. Wednesday morning before market opens, you got Patterson, Brown Forman, Mastercraft, Vera Bradley, BioLine RX, and Conn's Home Plus. Aftermarket, you got CrowdStrike, Salesforce. These are some of the ones we recognize. Chewy. I see people with the Chewy boxes outside of their houses. I guess they buy dog food. Viva, Five Below, Pure Storage, Express, and Grief spelled EIF. Thursday morning, we got Dollar General, Polestar, Academy, the Sports Store, UBS, Camels, the Soup People, Titan Machinery, Ollie's. I didn't know Ollie's had a stock. CIBC. Thursday after market closes, we got Broadcom, Lululemon. I did see something about Lululemon and the material that's inside of their tights not necessarily being good for the females. I did see something about that the other day. Please do your search. Don't be long taking what Arlissa said, but I think I'm pretty sure I saw something about it. Dell, VMware, Amarin, Nutanix, and PagerDuty. And Friday morning, there's this stock here. I don't have a clue. I think these are Chinese symbols, though, but I don't know who that is on Friday before the market opens. All right. I want to go and check out some charting that's not the chart I wanted, some charting from SPX from last week. I kind of touched on this a little bit this morning. If y'all got questions or things, please be sure to put them in the comments. Something you want to know, something you want to ask about, you want to just jump in and comment, please be sure to put them into the comments. Weekly support can't stay there. So this is a weekly chart of SPX. Weekly chart meaning every candle here is a week's worth of data, right? So I'm starting at a real broad view, and then I'll narrow it down and get a little closer to what thing is. So you can see from a weekly standpoint, SPX went up and up and up. It got up here to about 45.85 and some change, probably up to 4,600. Hit this resistance up here and turned back. Probably could put us a resistance line right up here at the top of that. No, I don't want it to be dotted. I want it to be solid, and I want it to be black. There we go. Resistance at 45.84. Now, there's a little bit of wick that happened above that, but I put my resistance and my support lines at the end of the box. The box represents the open and the close or the close of this week. So in this particular big red candle, this place here, 45.85, represents the open of that week. And then the end of the close of the week is down here at the bottom. Okay, red candles mean it was down for that week. Green candles mean it was up for that week. That was the resistance there. So then for the next 1, 2, 3 weeks, it fell down. Actually fell down a bit in the fourth week, but it opened here at 43.79 last week and closed at 44.07. That was the week. That's what happened for the week. Green turnaround, maybe not. We need probably a little bit more, another candle or two to tell whether this is a reversal or not. At this point, what you see is more like a slowdown. There's a lot of wick action that's happening here. If you can see the wicks, you can see that there was a bunch of price action that went up and down for the week and even down here, but that it didn't open and close there. Okay, now let's look at the daily chart. You got the daily chart here now. This is what happened during each day, right? Every candle represents a day's worth of price action. So for the last week, we've got all these days. Basically, we gapped up for the morning of Monday, created this gap. Even on Thursday, it dropped down and got into the gap a little bit, but then didn't finish it. But you see here, I got a daily buyer's gap. That the buyer's gap basically mean that we skipped over going up, that there's buyers hanging out in these, between these two green dotted lines, that there's buyers hanging out in here. And when price comes in, the buyers will pick up and maybe go ahead and buy some, and it runs it back up, which is what we see happened over here on Friday. Right. So last week, what we say was a green week. So we see that all these were up. We had one big red day, which this is the day that I was thinking of that NVIDIA had earnings on this Wednesday after market. This is the Thursday that everybody was, well, I won't say everybody, but the people were selling their NVIDIA. NVIDIA was coming down on Thursday. That I'm sure there were other things that was going on too. It's not just NVIDIA that plays its role, but it did play its role. That's the thing. You can't give it all the credit, but you can't give it no credit. All right. So there's a buyer's gap here. And then we have some support. The support is back from last Friday, was created Friday before last, I guess. So our support is at 43.44. And our resistance on the daily chart is at 44.55. See how we've kind of been trading inside of this zone for several days, kind of bouncing around inside of this zone. What's going to happen for next week? Hey, I broke my crystal ball. I must have dropped it, so it doesn't, and my crystal ball doesn't work as well. It doesn't work as well as it used to. So, I mean, from what you can see, it looks like there may have been a pullback, and there may be some more. It looks like there's some more room, at least going back up to the resistance area, and we are green. So there could be some green days and bump us up back up to the 44.55, and or it's kind of in the middle, so it could also drop down to this support. But support is at 43.44, and our resistance is at 44.55. And it's been in that zone now 3, 4, 5, 6, 7, 8 days. It closed in the zone on this first day here, and it's been in that zone for 8 or 9 days. So very well could stay right within that zone. Yep. So if you follow me on Facebook or wheresoever else, you'll see that I made some posts with some cash secure puts and some covered calls. I think last week I mentioned I was going to do some of the cash secure puts and the covered calls, and then I hopped off the call and forgot even talking about it. But if you're still hanging out with me, please be sure to, like and subscribe to the channel. You can follow me in all the places where you find Educated to Trader. I'm literally on all the different social media platforms. I'm active on some more than others, but I am in all the places. But I really would like for you, I try to focus my efforts and energies on what is going on YouTube. So be sure to subscribe to the YouTube channel, so that way you won't miss anything in YouTube land as we go. Okay. Let's see about looking at we'll look at cash secure puts first. Cash secure puts and covered calls are a way to run what's called the wheel strategy. Not sure if you all have heard of the wheel strategy. And it's basically where you sell puts. When and if you get assigned, then you take your 100 shares. You then sell covered calls against those 100 shares until they get called away. And then you rinse and repeat this process over and over and over. It is probably the wheel is probably the most, if not one of the most passive strategies you can use to trade options. All right. I made a post yesterday that said the most consistent strategy to use for returns is covered calls. And you do covered calls by starting with cash secure puts. It covered calls and credit spreads, which credit spreads we do also, but covered calls is here. Credit spreads is definitely another somewhat passive way that we'll do that. Yes, the wheel strategy is what we do. Cash secure puts, 10% profits. You can do looking at 9/15. Some people can go out, may want to go out to even the October expiration. I try not to. I don't necessarily like going out that far, but sometimes I do like that the premiums are nicer a little bit further away, because the further out in time you go, generally the more you get in premiums. But that means you got to leverage your capital for a longer period of time. I like to see the trade starting to make some moves, and if I go out like 6 and 8 weeks, it takes even longer for the theta to start chewing on the premiums and for the premiums to decrease, which is what you want when you're a seller. So I like to go to the next month, 2 or 3 weeks out, something like that. That's for me. That's on my own personal. Again, none of this is investment advice. If you are trading, you're trading with your money. You are the CEO of your own portfolio. Okay, you are your own CEO. Okay, anything I'm talking about is just offering some suggestions and tips, and we're here to help the people. But here's some stocks you might want to look at. Nikola, DHC is a healthcare. EOSE, which I actually really like this company. EOSE uses rechargeable zinc batteries. Zinc is something you don't hear. You hear about lithium and some of the other things, but EOSE is using zinc to do batteries, which I like, that as an industry interrupter. I like stuff like that. Archer is the next one, 5 Strike, and Mara. Mara, of course, goes with Bitcoin and goes in that whole crypto space. But when you're selling puts, again, if you saw my Facebook post, when you're selling puts, you find your strike below current price. You pick the bid column and you collect your premiums and let the trade run its course. You don't need to do anything after you've entered a put credit spread. Let's go look here. Let's go do one while we're talking about it, since we're on here together and we're not really in any particular rush. Are we? Are y'all in a rush? Anybody in here in a rush? I hope not. Okay, so our current price is $3.51. I think I said on here to look at the 2.5 strike, which, okay. We're looking at, this is a week away. Let's go look at the 15th, which is what I said on that graphic. You're at the 15th of September. You're on EOSE. I'm on the single option chain. And if you're looking at the 2.5 strike, the ask column, the bid column, you're going to, you would grab hold to this 35 cent. You're going to collect $35. You're going to collect $35 in premiums when you leverage $250. So 2.5 times 100, $250 is what the collateral that will be required from the broker while this trade is running. And they're going to give you premiums of $35 while that trade is going. All right. That's how call credit spreads work. You're going to get premiums in the 35s. I was trying to see the comments. Do I look at the daily trading volume? It depends. That's a good question. Do I look at the volume? It depends. I don't watch it as closely with the trading volume on the cash secure puts because I'm not necessarily going to close it. That if I decide I'm going to trade one of these as a cash secure put, I'm letting it run till expiration. So I don't necessarily watch, but that's not a bad thing to look at. Shit, thinking about, what kind of volume. EOSC doesn't have a lot. You see over here, it's not a whole lot of people on the 15th of September. Let's see if the 1st of September, there's a little bit more volume going on at the 3 strike. You got 1,300 here. When choosing stocks to trade, not so much. Not so much. I kind of look at the ones that are going to have a high IV that are going to pay a decent premium. And, there's going to pay decent premium on the put side and on the covered call side. So if I'm going to sell puts against a stock, I want to look on the call side to see if I am assigned these shares at this price, can I make decent premiums on it when it's if I sell covered calls. So let's look at for EOSE. If we were looking at EOSE, I pulled back to September the 1st. If we were looking at just 1 week, if I wanted to do the 3 strike, it would pay $25 in premiums, right? And if I was assigned them at 3, I'd want to see at 3.5, what would have covered calls be at the 3.5? And it pays $55. So if I'm going to collect $25 as I sell the put. And if I'm assigned these shares, I'm going to be able to collect something in this neighborhood. Nothing's ever the same. I'll be able to collect something around $40 or $50 in covered call premiums. Okay? Covered call premiums. And you can go out in the weeks. I'm going out September the 8th, right? If you want to do the 2.5 strike collect $25, or the 3-strike collects $45. And if I was to get assigned them at $3, I would sell covered calls at 3.5, and I would collect, look here, $75. I want to make sure that I'm not getting something that pays really good on one side, but then doesn't pay very well if I get assigned the shares. I want to also be able to sell covered calls on it as I continue to move forward. Okay. I think DHC was another one I said, let's look at. Diversified healthcare. Now, something I also don't do, just as a thought, I like to be able to sell them week to week. So if a stock like DHC only has monthly expirations, for me, I'm out, because I want to be able to sell weekly puts and sell weekly covered calls. All right. So that would take DHC off of my list. ACHR was another one. Looks like they also have monthly expirations and not weekly. The one I just was looking at was DHC. DHC was a healthcare. EOSC was the first one I was talking about. I like that one too. It's the one that they have zinc batteries. And thank you. They have zinc batteries. And but ACHR, same thing. They have monthly expirations, and I am not a super fan of monthly expirations. I'd much rather have them be able to expire on a weekly basis. That way I can, decide how many weeks out. I don't want to have to go out 2 months if I'm trading it. I want to be able to choose a week or 2 weeks or 3 weeks. Okay. In this case, I picked up Mara. Mara is going to be, if you look at a 10 strike, you're going to collect $45 on the 8th. I thought we're going to look at the 15th. If you're looking at the 15th of September, a 10 strike is going to collect $62 in premiums on the front side, right, when you first enter to sell the put. And if you're going to get assigned and you sell covered calls, then 10.5 strike is going to pay between $70 and $90. Another low-cost one that we have on the list is Nikola. Nikola's been falling off for a minute. They were going really well as far as their stock price and everything. They got assigned their electric trucks, I believe, and they had gotten some good orders that came in, and then they had a little bit of a recall, and folks were like, "Oh, Nikola not gonna do right." So they seem to stay on the sell a put list, and they still show some strength, but you'd have to think about, it's $1.31 a share. So then you're now getting into the penny stocks, and you have to look at how, are you okay with the premiums you're going to collect and do with them? Now, the good thing about using Nikola is if you do the 1 strike, which is what I said on that paper, you do on my little graphic. If you do the 1 strike, you're going to collect $9 in premiums, which is about a 10% return. You're going to leverage $100 and collect $9. And then if you get assigned, you sell covered calls at the next strike up and collect 13, which is another right around 10% return on your money. Getting a 10% return on your money in a couple of weeks, not so bad. I think you have to look at everything like relatively, right? Sometimes we'll say, that's not any money. And I do know, I'll preface, I'll like work that with, it's not just the fact that you're going to get paid $9 or $10, because $9 or $10 in itself, when you're looking at real dollars and what you need to spend money on, $9 or $10 is definitely going to feel like I need to be collecting more money than that. But the reason I come from the percentage standpoint is I'm always thinking that if I'm going to leverage $100 and I'm going to collect a 10% return, well, if I really want more money, I can leverage more money. Instead of doing 1 contract, you do 2, you do 3, you do 4, right? So that way you got one thing going, you're pulling in more money at a time, because more contracts means you just multiply these amounts by more contracts, right? So if you find one that you like, that's a good rent and repeat, that's going to give you a good return on your collateral, then you just do more contracts. That's the way that can go, right? Now, talking about that, last week we did AMC, and we kind of talked a little bit about AMC, and then AMC did their reverse split. And several of us got caught in the crossfire of the reverse split of AMC. They had tremendous premiums last week. But then you basically looked up, and instead of having I was selling puts, I sold a couple of put options at the end of the week, and where you normally, if you got assigned, you would collect $100. I mean, sorry, 100 shares, not $100. It would be great, but you would collect 100 shares. Well, because they did a reverse split, once you got assigned, you got 10 shares. Before you were getting 100 shares at $3 a piece. Let's say if you had the 3 strike, you were getting 100 shares at $3 each. Well, when they did the reverse split, then the shares were now worth $30. Well, the 3 strike is $30, and you end up with 10 shares at a $30 price, even though the price now of AMC, I want to say, is like $12 or $13. So right off rip, you were 12 and some change. Right off rip, you had a $30 stock, well, $30 stock that you paid $30 for, that's now worth $12. So it's always important when you're looking at doing covered calls or cash secure puts, if you're going to do them that way, that you look to see what kind of events are going to happen around these stocks in the period of time that you have your trade going. You want to check, do they have earnings happening in this window of time? Are they having a reverse split? I mean, some stuff you just can't know, like Nikola having recalls. That's not something that's put on a calendar, right? When nobody's putting that, oh, by the way, on August the blank to blank, we're going to issue a recall. That's not in the news. It comes up after it happens. But some things we can look at forward to say, oh, yeah, they got something going on that's coming up, and then we don't trade those, and we just wait and let the fallout happen and then come back around later. So now let's talk about covered calls. I was saying in the post I made that covered calls has been shown to be one of the most consistent trading strategies, not just for sellers, but consistent, period. Right? So, we're always looking at something that's going to pay us consistently. And this is another very passive way to generate your resources. EOSC's on this list, so is Nikola. BTAI and ARDX. Let's see who they are. BTAI is a BioXcel Therapeutics. They have monthly expirations, though. Again, that wouldn't be of interest to me. But what you do when you're doing covered calls is you would either have the shares or you buy the shares. And I don't think that's it. ART, maybe it was ARDX. Yeah. You have the shares or you buy the shares, or you have a long call. It's another monthly one. Or you have a long call. And when you have a long call, you can sell covered calls against it. Let's go. I'm going to see what EOSC would look like from the other side. If you already have 100 shares of EOSC, let's say you were assigned at a previous time, or you decide you just would rather buy 100 shares of EOSC in order to do covered calls, you want to make sure that you sell covered calls at a cost basis higher than what you paid. So if you paid $350 for them right now, then you want to sell a covered call at $4 or higher, right? You don't want to sell covered calls, below what you paid for them. Like, you want to sell them for a profit if you can. If they're going to be called away, you want them to be called away for a profit. So you got $350 as your current price. If you had a long call on EOSC, you could sell covered calls against it. Again, sell at or above your strike price on your call. But if you're just going to buy 100 shares, if you believe in the company on longer term, this is where you could do that with them. You buy 100 shares and sell covered calls on it as it does its thing. That's something we were doing with SoFi there for a while. And SoFi has to dance around. SoFi is just doing its dance. Do a little dance, make a little love. It's just doing all that. SoFi's doing all the stuff. SoFi's been doing all the stuff. And somebody's got to get out the way of SoFi so it can just run, because it's ready. It's poised and ready. But it can't run because things are in the way. The whole student loan thing is in the way. But SoFi still is a solid place to be. I believe in them long term. Y'all probably heard me talk about SoFi a few times. I really believe in them longer term. But we weren't talking about them right now. We were talking about EOSE. Stay on track. Or let's stay on track. AMC, I think, would also be a good place to go and, work around with. AMC just would have to be watched at this point, because they've got to work through their issues, their legal issues. But AMC's premiums AMC has good premiums. Notice here, if you were talking about a 10 strike, 11 strike on the puts, you're going to collect about $50. If you go out another week, wonder why that shows 2 weeks there, two different things on AMC. That's weird. I wonder why it split up like that. I wonder if it's just because of the yeah, you notice here that everything is got a twofer here. I wonder if one has to go with AMC pre-split and or pre-join together and AMC post-join together. Y'all see the differences here? We got up till, this is all over 10 and this is all, I don't know what's going on there. Maybe don't fool up with AMC just yet, because we don't know what this is looking like. This stuff is looking kind of wonky on their option chain. I don't know what's going on there. So if it don't look right, we don't know what we're dealing with. You just got to let it settle, let it rest and do its thing, right? So there's that. Cover calls. Basically, you own your 100 shares and you sell, yes, and you sell your cover calls against what you already own. I want to stop presenting. There we go. Stop sharing. Does a little bitty thing that says stop sharing. It's so chinchy. Cover calls, you're going to sell a call above your cost that you paid for them. So if you paid $5 for shares, you want to sell them at $5.50, $6, that kind of thing, right? You want to sell cover calls above what you paid for the stock. Two very passive ways to generate income: selling puts, selling cover calls, working the wheel strategy. If you know about the wheel strategy, then cool. If you don't, but you're interested, I think along the bottom of the ticker symbol is running that there is I do have a course that talks about, or training that talks about, how do we do the cash secure puts? Where do you find stocks? What do you do? How do you select them? What things do you look for? And then once you have, if you find the stocks for puts, basically for options, and then if you're assigned, how do you manage the cover call side? What do you, if you just want to start with cover call, some people don't want to start with the put side. They jump straight into the cover call side. Where do we find those stocks? How do we manage cover calls? How do we close them? All the things that go along with running the wheel strategy is all there. Okay. So today we've talked about what's happening in this week, what's coming up this week, right? We've talked about earnings. Not too many earnings are going this week. NEO was one of them. A few little small boys, the small guys, or I say small, they're all big because they wouldn't have stocks if they weren't big, but small comparatively, like they're not big like Nvidia. They're not big like Apple. They're smaller ones, but their earnings matter too. All earnings matter, right? We talked about that. We talked about SPX and looked at some charting for the week. And in my community, what we do is we look from day to day. We trade SPX and XSP every single day. Ooh, that XSP offers opportunity. It's a one spread. It's cash settled. You can do credit spreads. So you're putting no more than $100 of collateral on, and you can make that money every single day. Now, I also think along the ticker in the bottom is talking about using or getting that training that includes how to use SPX and or XSP on a daily basis for at least 10% profits each day. At least 10% profits. You can leverage $300 for XSP and make $30 a day and rinse and repeat that. By the end of the week, you've made $150, right? 30 times 5 is 150, I believe. Yes. You use $300 over and over and over, and you made $30 each day, $150 at the end of the week. You can rinse and repeat and multiply that multiple times. Yeah. That, and it's cash settled. So when, like I said, if you owe them money, they take it. If they owe you money, they give it. That's the way that is. You don't have to worry about any shares and all that goes along with that. But there is some guidelines that go along with how do you enter those, how do you exit those, how do you protect yourself using the PDT hack, those kind of things. And all that stuff is outlined in the strategy. Is it okay to sell one contract of SPX instead of 5X? Absolutely. Yeah, absolutely. Where the difference, the question was, is it okay to sell one contract of SPX instead of 5 XSP? And the answer is yes. Where the difference is between the two for me, right, is that I do one, when I do one contract of SPX, I may take in 30, 40. You can take as low as $15 in on an SPX trade. You're collecting 15, but you're leveraging 500. Every time you enter an SPX trade, you're leveraging at least $500. Depending on what strategy you pick or how you're choosing your timing, you can collect, 100, 200, or you can collect 10 or $15. It really depends on your strategy and which strikes you pick for SPX. When you're dealing with XSP, you are going to be, if you're let's say my goal for the day, if I had a goal of collecting $50 a day, for example, I can say, okay, I want to do one contract of SPX at something greater than $50, and I can collect it that way. Or I could look at XSP. I may find a strike on XSP that's paying $14 or $15 per contract. Well, then all I need is 3 of those. 3, 4 would take me to $60, but I just need 3 or 4 of those. I don't need to leverage the entire 500. With SPX, each time is $500. But if we do XSP and the premiums are being paid at $13, $14, $15 per contract, then I can leverage less capital and still bring in the same amount of money I want for my goal. Okay, I hope that made sense. I kind of dance around. I didn't really dance around it. I kind of talked around it. SPX sometimes has much better premiums. XSP is going to determine when you get into them. XSP, you kind of got to get in a little earlier in the day, or you've got to get in at a place where if it's later in the day, you're going to find yourself getting a little bit closer to price action. Right. So those are the trade-offs, I guess, for XSP and SPX, the timing of it all, and what kind of premiums you're looking for in return. 6 in one, half dozen in the other. Sometimes you can do, one SPX and 2 or 3 XSPs, depending on if you're trying to, if you want to use something less than $1,000. If you do 2 SPXs, you got to do $1,000. But if you do 1 SPX and 2 or 3 XSPs, you're less than $1,000 of collateral. That kind of thing. Okay. I like them both. They both work together. A drawback to XSP for me is like sometimes you need that 50 cent in the middle. Instead of 433 and 434, sometimes you just need that 433.5, that middle place, because that's a big jump from 433 to 434 on XSP is a 10-point jump on SPX, and sometimes you just need that little 5-point in the middle. That's a good little place for you, but that's how that goes. Okay. Again, I want you all to make sure to like and subscribe to the channel. Be sure to scroll through. I mean, I've got different topics on there to see, different things you want to learn and see on there. If you've got some topic that you'd like for me to cover in my YouTube channel, then send me a message. Make a comment to one of the, to one of the videos or something, and say, can you tell us about so and so? Make a video about this, and I'll create a video about that too. But as we wrap up, we do 2 things in this community. Woo, 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 woo. Y'all see our Stay Green and Get Money shirts? We stay green. Yes. And we get this money. All righty. I'm going to see you all later. Please check me in the channel. All righty. See what's going on over there. If you need somebody to trade with and you want to hang out with some folks to trade with, our membership is always open. A membership is where you can find some people to trade along with. bit.ly/E2T membership. We trade together. Each day we have an exclusive Telegram. We have a pre-market call every morning. I have the Telegram, like I said, we do bi-monthly coaching. And then we have a virtual power hour. Basically, we just hang out together. It's always good to have, people that you can bounce your ideas off of, places you can bounce your thoughts off of, to say, what do you think about this strike? What do you think about this strike? What do you think about this trade? And somebody who can say, I'm getting ready to get in this trade, and somebody else comes into the chat and says, no, you might want to wait because, Powell's coming up, or you might want to wait because so-and-so. So sometimes you may have forgotten what's going on for the day. Somebody else comes along and says, no, we still got something coming today. Maybe give it a minute before you enter your trade. Those are the kinds of things. It's a community of people who are doing the same thing you're doing, who are going the same direction you're going. All righty. All righty. Well, I'm going to say again, I'm going to say goodbye. I want to talk about that membership. We do two things. We stay green and we get this money. And I will now see you all later. All righty. Bye-bye, everyone.